We close a winning trade on Friday, but it's not exactly what we're looking for. Now we're watching this ending diagonal take shape. This is Invest with Jacob. Okay guys, so we opened and closed a trade on Friday for a 10% gain. It wasn't exactly what we were looking for, but it sure beats a punch in the face. At any rate, we were looking for a B wave bounce, which we got and we bought the top of, and then we never got the C wave follow through. It went down, but not like it was supposed to. So with that, we are now looking at a more complex structure called an ending diagonal. Now we'll get into that in just one second, but first, if you are new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob. And I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. Okay guys, so an ending diagonal is a pattern where you get 5 waves up, but they are all 3 wave structures. So typically what you would see is a 5 wave move up where waves 1, 3, and 5 are 5 wave structures, and waves 2 and 4 are corrective 3 wave structures. With an ending diagonal, you get all 3 wave structures. So 1, 2, 3, 4, and 5 all end up being ABC patterns. Now ending diagonals aren't that common, and they are a little more complex because of this ABC pattern. They often grind and overlap, and it makes it very difficult sometimes to navigate the path. But as always, it's best seen on the charts, so let's jump in and take a look. Okay guys, so here we are on the 1 hour futures chart, and I wanted to zoom out for a minute to show you where this ending diagonal started and why it makes the most sense. So back here at the May low, okay, where we got our 4 wave down, looking to complete 5 of 3 of 3. Okay, when we got this low, we had a 3 wave move up here that we assumed was the B wave. But then we didn't get a C wave follow through. It came down and it was short and it was in a 3 wave pattern here. You can see the A, B, C down, okay, and stopped here. So at the time, I kind of thought it looked like a truncated C wave that we might just have to go from there because we got a 5 wave structure up out of it. And when you get a 5 wave structure off a move down, that is generally the start to a new wave count where you're in wave 1. However, as this has moved through, and you can see from back here all the way through, there's been a lot of overlap and chop, and this makes for a very complex structure. So with that, after we reached this high, we thought that this wave 3 up here had actually topped right here. And it didn't make a whole lot of sense because it missed our 44.40 minimum target by more than we expected. And as you know, when we miss targets in Elliott Wave, it makes me skeptical of the count. So when we did that, we got the pullback in an ABC structure here. So we assumed that that was the A wave down off of 3 because we expected a larger pullback, seeing as it's a slightly higher degree wave. And then we never got the C wave follow through. And what's telling me that we're likely not going to see that C wave follow through is the structure that it has taken on up here at the top. Okay, so what I wanted to show you is how these patterns play out. So normally you would look for a 5 wave pattern, but here off of this 4, you've got an A, B down here, and then this peak is C for wave 1. And as I said, typically waves 1, 3, and 5 are 5 wave moves, but here it's a 3 wave move. It's A up, B down, C up. Now, the complex part about ending diagonals and somewhat confusing, and guys, if you're confused right now or you're not following along too well, I will summarize this in a very simple form when I'm done, but I do want to go into a little bit of the complexities for those that are following along and trying to learn Elliott Wave. So in an ABC pattern, whether it's a corrective pattern down as a 2 or 4 wave, or we're in an ending diagonal, the C wave is always a 5 wave movement. And as I told you, when we got this low over here, this was a 5 wave structure that we originally thought was just wave 1, and it kind of was, but not in the way that we thought. Okay, so you had A, B, C up for wave 1, then you had a clear A, B, C down for wave 2. Okay, then you had A, B, C up for wave 3, A, B, C down in wave 4, and now we're building out wave 5 towards 45.50. So that's a little bit of a zoomed out look at how we're getting to 45.50 and why we have changed our count. I know there are people out there who say that, hey, people who use Elliott Wave just change their count to make everything work out. And that's only true in the micro sense, because as the micro is building itself, and we'll see here in a minute as we zoom in, as the micro is building itself, it takes on different shapes and forms. And what Elliott Wave does is it allows us to take the infinite number of paths the market could take and narrow it down to just a few choices, and it gives us very clear targets and support zones so that we can make excellent trades. Nothing is foolproof and nothing is going to work 100% of the time, and you have to be willing to adjust and understand that when the information changes, the count may change. And that's what's happened here. It's very common in the micro sense, but in the macro sense, if you zoom out and look at my count in the macro, we have followed it almost to a T, hitting target after target. And if you want to see that, you can check out my video called The Big Picture. I'll link to it right here. Go ahead and check that out. That has the big picture update of where we've been since the market started and where we're headed. Okay, so with that, let's look at the micro chart. Let's zoom in here, and we're going to zoom in on this section up here, okay? So we have A, we're trying to build out B here, and this B is actually not accurate. It's going to be over here, but we have A, we're trying to build out B down, and then we're going to go up to C. So we're going to zoom in on this flag here on the micro chart. Okay, so here we are zoomed in, and here is that A, and the B is over here. So the big thing that makes me think that this is going to be an ending diagonal instead of the C wave down is that once we made this high here and pulled back, the next move up to make a higher high, even though it was only by a little bit, was a three-wave structure. So you had 1, 2, 3 up. So when you have a three-wave structure like that after a high, and then you have a three-wave structure down and you bounce, that's not how C waves work. They don't go make a new high and then come down and invalidate in both directions. So a three-wave up, a three-wave down, and then back up again. So what this is telling me is this is looking a lot more like a triangle for the B wave that's going to play out to the C wave of the ending diagonal. So a triangle is basically a consolidation zone that is a 5-point movement up and down that kind of overlaps the whole way. As we're seeing here, you got A down, B up, C down, D up, and E down. And what we're seeing in the futures, guys, is it's already pushing up even higher here into this D wave. So I'd expect by morning we will be up into this area here to push up and make D, and we should come back down in E to complete wave B before moving up in wave C towards 45.50. So what are the parameters we're watching here? Well, we would like to see this push up higher into the D wave, and it can even go a little higher than this line. This line just kind of gives us a guide, but we would like to see it push up into this area here or even a little higher. Then we'd like to see it come back down in E before bouncing up and starting into wave 1 of C up. Okay, remember the C wave structure is always 5 waves in a corrective structure. So A is usually 3 but can be 5. The B wave is always 3 waves, and C is always 5 waves. So that's what we're watching tomorrow, is for this top to happen, this pullback, and then an explosive move up out of here to complete wave C up towards the 45.50, 4600 zone. Guys, if you like this information and you want real-time data, if you want to know when I think this market is turning, when we've bounced in E and entered into wave C up, if you want real-time information from me, you need to get in my Facebook group. There's a link down in the description. Click that link, it'll take you over there, okay? You'll get into my Facebook group, which you see here. If you click this announcements tab right here, okay, you'll scroll down and you'll see that I document all of the trades we have on the channel, so you can see how we do there, as well as you'll see a link to my Slack channel. Slack is just a free chat channel that you can get on. There I give real-time market updates. I give our trade alerts, whether it's a buy alert or a sell alert, and I tell you exactly what and when we're trading. We have a great group of people in there. There's some really talented traders in there, a lot of people just learning how to trade. I answer all of your questions. It's an awesome community. We would love to have you. So come on over to my Facebook group and into the Slack channel. Okay guys, so key takeaways for today. We are going to watch and see if they fill out this D wave up before coming back in E and then bouncing up in 1 of C towards 4600. Okay, our plan is when we come down into this E area and get the bounce, if we get a nice strong bounce up, we're going to go long there, with our risk being coming back below the low that would have been made here, and our reward being that 45.50 to 4600 area. That is the market update for today. I will talk to you tomorrow.